Welcome everyone to the iConsumer shareholder webinar. My name is Kimberly Logan. I run operations here, meaning I kind of deal with everyone on the merchant and shopper side. And I'm going to introduce our co-founder and CEO, Mr. Rob Grosshandler.
Good afternoon. Thank you, Kim. It is great to be here. Each time I do this, I learn a little bit more about the GoToWebinar interface. For instance, I learned today that you can freeze your screen, and even though you're clicking madly, nothing actually changes. So today we're going to stick to a half an hour. We really appreciate your questions. Hopefully you'll appreciate our answers. We have a bunch of things we're going to cover. First and foremost, what it is to be a shareholder in a company like iConsumer. We're going to talk a little bit about the market and what's happened to iConsumer stock over the last bit of time. We are going to sort of review how iConsumer works. Near and dear to some people's heart is how one might go about selling your iConsumer stock. Near and dear to my heart is helping you refer your friends and maximize your ownership, and then making it more interesting for all of us and making sure that it's customized for you. We are a bespoke webinar. Are your questions and answers, and you don't have to save them up to the end. You can do them as we go along, and hopefully we will address them as we go. So being a shareholder in iConsumer is really about three things. First, it's about shopping, because we hope and expect that each and every shareholder is incented to go shop, because when you go shop, you help to build the company that you own. Secondly, and this one's a little bit tongue-in-cheek, being a shareholder is about sharing. So we're sharing what we're learning about creating a public startup. We hope that you're sharing what you're learning about iConsumer with your friends and family. So many of the people who are engaged with and helping make iConsumer a bigger, better place are learning all about being part of a public company for the first time. So the three pillars of our stool really are shop, share, and learn. We think it's important. We try very hard to do it. And today, this webinar is all really about the learning aspect of iConsumer. What's it mean to be a shareholder? Well, first and foremost, you own a piece of the company. You aren't just a customer. You aren't just a cheerleader. You are an owner. And we hope and believe that means that your interests are aligned with our interests. That is, the things that you want to do to help you will also help iConsumer. And the things that iConsumer wants to do to help iConsumer will also help you. At the end of the day, we think this means that you're going to reap the benefits of iConsumer's success. One of those benefits is an increased stock valuation. There's no promises there. It's a potential benefit. But as iConsumer becomes more valuable, if iConsumer becomes more valuable, you share in that ride. It also means that you're along for a long-term play. What I mean by a long-term play is that this is not a get-rich-quick scheme. This is let's call it a get-rich-slow scheme. We're going to talk a little bit more about that. But when you build a company, except in the very rarest of circumstances, you should expect to be in it for a while. Having said that, because of the way we're doing this, there are some interesting things happening, and that's around because we're public. And that one of those is the liquidity of our stock. You can buy and sell iConsumer stock on the open market, and that's a very unusual thing. We did it for a whole bunch of reasons, and I'll talk a little bit more about that in a bit. But it is an interesting attribute of what we're doing. And for those of you who care, you look it up on Google, OTCQB RWRDP. is the RWRDP is the stock symbol. And again, for those of you who care for the real minutia, the P is for preferred. So RWRD, reward, and P for preferred. So that's a preferred stock. Let's talk a little bit about what I mean when I say it's a long-term play. We're early stage. We're still a startup, not unlike some companies that are really in the news a lot, Uber and Lyft and Snap. These are companies that are 5, 6, 7 years old and are now going public, even though in most cases they're still losing a bunch of money. I would love to be as large as an Uber or a Lyft or a Snap. We're not quite there yet. We have a little ways to go, but we are in the same world. We are an early stage startup. The people who backed those companies, the Ubers and the Lyfts, understood that this kind of a journey is a longer term journey. You need to have a 5 or a 10-year investment horizon. That doesn't mean you can't get out or get in along the journey, but think about it as a 5 or a 10-year kind of a thing. The only reason iConsumer is public is that we wanted to make sure that each and every one of the people who helped to build the company have a stake in the company, have an ownership stake in the company. We want to have 1 million plus shareholders. To do that in the United States, we needed to be public. So we've got some interesting things about iConsumer because we're public. It makes us a very rare event. And we're learning stuff. No one's ever really done it this way before. The market is learning stuff, and it's got to be fun. And it is fun. So you're going to hear me sort of talk out of both sides of my mouth about this subject. It's a long-term play. I want everybody to have patience. I want myself to have patience. On the other hand, it's also a lot of fun to look at the stock market price. And we're talking about learning. And so a good reason for being involved with iConsumer is you can see what happens to our stock price. And when I talk about a long-term play, I think just about anybody who's involved in the cash back space knows about Ebates, and Ebates is in the middle spending oodles and oodles of money rebranding themselves as Rakuten, Japanese company. A quick history of Ebates. They were founded in 1998. They were sold in 2014. A little hard to tell, but it looks like they raised about $85 million to get to the day they got sold, and they got sold for about $1 billion. That's a lot of money. And that's actually one of the inspirations for iConsumer, because iConsumer saw that when Ebates sold for $1 billion, the venture capitalists were very, very, very happy. But the people who built the company, the customers, the members, the shoppers, they got not a big fat check. They got a big fat zero. And we said, we can do this in a better way. And iConsumer is that better way. Okay, so let's talk a little bit about what it means to be public. That means we have a price that is published. People are out there in the market buying and selling iConsumer stock. I'm going to try something I've not done in one of these webinars before. I'm going to pull in the current thing, and let's see. I believe you can see it. There we go. And here you are. We can see that here's the symbol. And by the by, I am on the OTC Markets site, otcmarkets.com/stock/RWRDP/quote. And this is telling me that the last time someone bought or sold, because it takes a buyer and a seller, our stock, they paid 10 cents. It's telling me that someone is willing to buy more of our stock at 5 cents a share. They'd buy up to 20,000 shares. Someone is willing to pay if you wanted to sell. If you wanted to buy our stock, they would sell it to you for 10 cents a share. There's 23,000 shares there. And they calculate that out to mean that there's iConsumer is worth just shy of $11 million, according to their calculation. And here's a bit of the detail in this, right? So these are market makers, and these are what they're willing to pay. These are what they're willing to sell. And you can see all this, and it changes every day. And here's a history of the last week or so of the trades. And you can see that we had a couple of trades at 10 cents, we had a trade at 19 cents, and then a lot of 10 cents a share. So that's the up-to-date kind of numbers. I have a couple of screens here in case that didn't work that I'm going to flip through real quickly, right? The quote screens and the trade data. This is from February. This one's sort of fun. In February, on one day, we had 5 trades at about 14 cents, 15 cents, and 6 cents a share. But another thing to understand, or to watch out for, or to at least put into your thinking cap, is this is for very, very little stock. So a trade of 100 shares, $15 worth of shares, will move the stock price. In this case, it moved it 8 cents. So when we talk about volatility and we talk about liquidity, iConsumer stock is extremely volatile. It goes up and down radically, and it's extremely illiquid. There isn't very much being bought or sold. And one of the reasons there isn't very much being bought or sold is because most of the people, I would say by an enormous number of people who own iConsumer stock, aren't interested in selling it because they have a 5 or a 10-year horizon for it. It's just too early. Graphs are always fun. So here's a current graph, and this one actually comes off of the iConsumer website. So if you go to iConsumer.com and you go to your dashboard, you'll get your up-to-the-minute version of this particular graph. So when I talk about our stock price from both sides of my mouth, I'm sitting here and I'm telling you that you really should ignore the stock price. You really should not be involved in iConsumer if what you want to be doing is buying and selling our stock. That's just not the right stock for you for the world at this moment. It's highly illiquid and way too volatile. On the other hand, it's fun. I don't want to ignore the fact that watching the price of iConsumer stock isn't fun. And it's also possible, not necessarily easy, but it's also possible to sell that stock. So if you really did want to sell it, maybe it's too early, maybe you wanted to go buy a motorcycle, I don't know what it might be, you can work on selling your stock. So let's talk a little bit about how that all happens. As you probably know, iConsumer consists of about 2,000 retailers, and you go shop at that retailer. And the retailer pays us money for when you go shopping. And it's give or take 1% to 20% of the transaction. It's high some places, low other places. But fundamentally, you go spend $100 at Macy's. We earn, call it $5, and we share that with you. We share that commission with you in the form of stock and cash back. So you get a little bit of reward today, and you get a lot of reward tomorrow. That's the fundamental premise of iConsumer. So now you got that cash back, and it's in your account, and we sent you a check. We also have those shares of RWRDP, reward, BRWRDP. It's a mouthful. And you say, I would like to sell it, or I think that I would put it in my brokerage account because I just like to see the fact that my brokerage account goes up and down. And you may not even have a brokerage account yet. Let's talk about that. So the first step for the stock that you've earned as a shopper is to instruct iConsumer to transfer that stock from us to our transfer agent. All this stuff is set out by the SEC. We have to do this to adhere to the various laws and regulations that govern being a public company. And there's a cost to this. And there's a cost for a couple reasons. One, Issuer Direct is charging us money. And secondly, the SEC mandates that we make sure that we don't transfer stock to terrorists. And so that costs us money. And so as long as you're not a terrorist, and we'll get that stock into your issuer direct account. It takes a couple weeks to do. We do this about once a month. Okay, so now you've got stock over at issuer direct. Issuer direct is a transfer agent. Probably, whoops, I hit the wrong button. You'll probably want to move your stock out of your issuer direct account into a stock brokerage account. A stockbroker buys and sells stock on your behalf. Our favorite is TD Ameritrade. TD Ameritrade is accepting deposits of iConsumer stock, not every day of the week, but once a week, twice a week. And they've got a really good process, and they are a highly efficient brokerage firm. And the reason you do this is at some point when you decide you do want to sell your iConsumer stock, you would tell TD Ameritrade, go sell my stock. So you'll do this. You will go to TD Ameritrade, establish an account, or if you have a brokerage account someplace else, and you will ask them to transfer your stock from the transfer agent, from Issuer Direct, into your brokerage account. Again, there's a cost for doing this. This is a cost that Issuer Direct, which doesn't really work for us, it really sort of works for you. And they're going to charge 25 bucks. There's some paperwork that has to happen. TD Ameritrade or your broker probably will not be charging you. And once it's in your brokerage account, you're free to do with it as you please. Then when you're ready, and not until then, and that could be 5 years from now, it could be 1 year from now, it could be 10 days from now, you tell your broker, let's say it's TD Ameritrade, to sell your stock. You're going to place a sell order with your stock broker, and you're going to tell them how you want to sell that. That is, do you want to sell that at market, or do you want to sell it only if the price is over a certain amount? And each brokerage firm does it a little differently, but you will have to specify the price you're willing to accept to sell your stock. Because of that, and some other things, there are no guarantees that someone will want to buy at that price or at any price. So the stock goes into your brokerage account, you tell the broker to sell it, and all of a sudden it becomes, and it does get sold, when it does get sold, it becomes part of the trade data. That's sort of fun. It's interesting. Just a note, because it costs money, it costs $7.50 to move your stock from iConsumer to Issuer Direct, and because it costs 25 bucks to move your stock from Issuer Direct to a brokerage account, I would not suggest doing this every month. I would wait until you have a whole big chunk of stock, thousands of shares of stock, before you think about doing this, so that your cost per share is very low. So you wait until you have enough, then you go through and do it. You know, you don't want to do the paperwork for just 100 shares. That to me doesn't make a lot of sense. But one of the beauties of all of this is that it's not up to me. It's up to you. You get to decide whether or not you want to move the stock from iConsumer to Issuer Direct. You get to decide whether you want to move the stock from Issuer Direct to your brokerage account. And you get to decide whether or not you want to sell your stock, your iConsumer stock, at the price that the market is willing to pay. So I want you to have thousands and thousands of shares of iConsumer stock. The reason I want you to have thousands and thousands of shares of iConsumer stock is that iConsumer makes money every time you go shopping. And the more money iConsumer makes, the more valuable iConsumer becomes. And hopefully, if all things are working the way they're supposed to work, the more valuable iConsumer is, the higher the stock price for all of us. So your shopping makes the stock that I own hopefully worth more. The stock market is a little bit of a weird place. There are no guarantees that just because we do better, our stock price will go up. And interestingly, there are no guarantees that if we do poorly, we don't sell as much, our stock price will go down. So I'm underlining that. The SEC is sitting on my shoulder, always making sure that we make sure that everybody involved with iConsumer understands that there are no guarantees. What we share with you is what we're trying to accomplish. What we share with you is what we think the outcome is going to be, but we're not in a position to guarantee any particular outcome. So we want you to go shop at iConsumer because you're going to get shares when you shop at iConsumer, and you're going to get, we're going to make money. You're going to get cash back, and iConsumer is going to become more valuable. We want you to tell your friends, because more people doing this helps to make iConsumer bigger and better. And lastly, if you care to, you can always go invest directly at iConsumer. Right, www.iconsumer.com/invest. We are still growing, just like Uber and Lyft and Snap are all raising money to fund customer acquisition. We're doing exactly the same thing. We grow as quickly as we have money to finance that. So, sort of by way of summary, our secret sauce isn't very secret, right? The more valuable we are, we think our stock price will go higher. If our stock price goes higher, you're going to want to own more of our stock. How are you going to own more of our stock? You're going to go shop and you're going to tell friends. If you go shop and you go tell your friends, maybe our stock price will go higher. So it's a virtuous cycle. I'm repeating because it bears repeating. Our stock price is volatile, and there is no way for iConsumer to control it. The only thing we can control, the only thing you can control, is how much shopping happens. I like dealing with stuff that's in my control. The more shopping, the more valuable we are. Just to give you a bit of a recap, when we started doing this, you wanted to go buy our shares, or you were getting shares because you were shopping. It was at 4.5 cents a share. Then from February 2017 through February 2018, it was at 9 cents a share. That is, if you earn shares because you shopped, we valued those at 9 cents. Or if you invested $100 or $1,000 or $10,000 in iConsumer, we sold those to you for 9 cents a share. And then since June of 2018, until we don't know when, we've been priced at 15 cents a share. So if you're buying shares from iConsumer, you'd buy them at 15 cents a share. If you're getting shares because you're shopping via iConsumer, we use 15 cents a share to figure that out. Now, one of the things I wanted to highlight here, we have a little bit of time, is that has nothing to do with what people are paying on the market, right? This is a much more speculative world, right? So right now, people are paying 10 cents a share, but you can't buy very much, right? If you wanted to buy all the shares in the market, you could buy about 55,000 shares at 10 cents a share. That's $5,500. This is what we mean by very little liquidity. So we've covered shopping, we've covered sharing, we've covered learning to a little bit. There is more ways to learn about iConsumer and this whole fun thing of being an investor in an early stage public startup. Shareholder Academy. Shareholderacademy.iconsumer.com has a learning center in it, and that's where we publish any kind of news we might have, some interesting tidbits about the market. When we have information that we think might be important to you as a shareholder, that we want to make sure that all shareholders see that information at the same time, we publish it at shareholderacademy.iconsumer.com. The other important site to know about is support.iconsumer.com. If you have questions, if you have concerns, if you need some help with something, support.iconsumer.com is truly your friend. We do a pretty good job of responding quickly to that. It is time for questions. If you have some, I'm looking on our question board, and
I've got one here.
Angela. Got one. Thank you, Kim.
Angela wants to know, what difference does it make if they buy shares on the market or from the invest page?
Great question. If you buy shares from the invest page, you'll be paying 15 cents a share, and all of that money goes to iConsumer. And iConsumer will use that money to do marketing and customer acquisition. If you buy shares on the market and you pay 10 cents a share today, that money goes to somebody who is not iConsumer. It goes to somebody who has bought iConsumer shares somehow. And so they will be happy that you bought shares from them. So right now, if you wanted to buy a small number of shares and all you cared about was price, you'd buy it on the market. You'd pay 10 cents a share. If you wanted to get maybe a double dip on your investment and give iConsumer some dry gunpowder to use for marketing, you would buy it from us. So buying from iConsumer, the money goes directly to iConsumer. Buying on the market, the money goes to an investor, not to iConsumer. Either are good. We want iConsumer investors who want to sell to be able to sell. We're not saying it's going to be easy. We're not going to say that they're going to get top dollar. But if you want to sell, we want you to be able to sell. So if Angela wants to go and do that, that's an okay day.
And just to follow up on that, are there fees associated with buying? You mentioned fees for selling. Are there fees for buying stock?
So there are no fees for buying stock directly from iConsumer. Those shares end up in an issuer direct account. So when you want to move those shares from issuer direct into a brokerage firm, you'd have to pay the $25. So you buy from iConsumer and you want to move those into a brokerage account, $25. If you bought on the open market, you use TD Ameritrade or Fidelity or Schwab or whatever to buy iConsumer shares, they will probably charge you, call it $5 or $6 to buy, and they will probably charge you $5 or $6 to sell. So it's a little bit cheaper. The overhead of buying on the open market is a little less than the overhead of buying directly from iConsumer.
All right, I think that answers Angela's question. Anybody else have any questions? We'll give you a few seconds to put that into our questions box. Otherwise, is that our last slide there, Rob?
That is our last slide.
Sean has indicated that it is $6.95 at TD Ameritrade.
Well, thank you, Sean.
Thank you, Sean.
I've seen $4.95. I've seen $5.95. If you're these guys compete on price. We really like TD Ameritrade. The fact that they are taking deposits of iConsumer stock makes them my most favorite brokerage firm ever.
All right, it is 1:31. We thank you so much for your time today. We are recording this and we'll post the recording in the next couple of hours. Have a wonderful day and go shopping.
Thank you.